Chapter 9 is covering employee compensation. So, as an employee, when you hear compensation, typically what you're thinking is what are you getting paid per hour, or what are you getting is your salary for the week, the month, whatever the case may be. When it comes to an employer, though, it's a lot more than meets the eye as far as what goes into a total compensation package. So, compensation from an employer standpoint involves all the financial and non-financial payments and the rewards for the work that is done. And it is more than just what we see on the other end as employee. It's more than just 8 hours times $10 per hour equals $80 or gross pay. That does not take into account the rest of payroll, Social Security, taxes, other payments, plus any benefits like insurance, vacation, sick pay, retirement contributions, and that's just the tip of the iceberg in a lot of instances. As a manager, you are caught in the middle. We want to try to make sure our employees are getting the most pay possible because we want to retain good employees, but we also need to make sure we're appeasing the owners and the upper management, that we're keeping our labor costs in line. Plus, as managers, typically we are salaried employees, which means it does not matter how many hours a week we work, we make the same amount of money. So for incentivization, most managers have bonuses that are tied to financial goals, which typically can include labor costs as well as product costs as well. So when we look at compensation, there are three types of labor costs that we have to take into consideration. The first, of course, is the wages, and that would be hourly wage, noting that state and federal minimum plus a competitive wage, tips and stuff all play into that. Salary, of course, is based not on the hours number worked. That is for what they call exempt employees, which are not qualified for overtime pay. And then we also have the benefits, which is money paid indirectly to the employee that's in support of the employee and to meet our government requirements for having employees. So there are benefit programs that employers pay into that fall into two categories. We have mandatory benefit programs and then voluntary benefit programs. So the mandatory benefit programs are the pay that we do that we cannot opt out of. So for example, unemployment insurance is a mandatory benefit, and it is anywhere between 0.625% and 6.825%, and that was as of 2020, and that can adjust from year to year. And then the Fed is 6%, and that's filed annually, and that is paid by the employer. Okay, so you can't take this insurance that you have to pay and take it out of employee paychecks. So that's over and above what you are paying your employee. You then have to pay the insurance for it, the Illinois and the federal unemployment insurance. And there's a couple of links for you if you decide you want to learn more about it, get some information about those. The other next side is then Social Security and Medicare. So for Social Security, 6.2% as of 2020, the employer and the employee. So it's a combination of the two, but you have a responsibility as well. You know, as an employee, you've seen your paycheck and you see, the taxes taken out, and you've seen Social Security, all that fun stuff that comes out. But not only do it come out for you, but then the employer has a portion of it as well. Same thing goes for Medicare. And again, some interesting reading if you'd like there, click on the link and check out information from the IRS website. In Illinois, we also have workers' compensation. And Illinois requires companies to purchase workers' compensation insurance through an insurance company. And the rates will vary depending on the number of claims and the number of employees you have, all different things like that. The workers' compensation must be paid by the employer. So you cannot pass that cost on as a deduction from an employee's paycheck. Now, you also have other voluntary benefits on the other side. So you can see there on the right-hand side, there's a lot of different ones that can do paid leave for many different reasons, unpaid leave for maternity and paternity, life insurance benefits, whether it's partially employer finance or employer finance, of course, medical and dental care benefits, and other ones, sickness and accident, long-term disabilities. You have retirement benefits, reimbursement accounts, flexible benefits, spending plans, other services like tuition reimbursement, child care, elder care, financial services, relocation services, recreational service, social programs. I mean, the list, goes on and on as far as potential voluntary benefits that you can offer to your employees. Sometimes people think that we look at just the bottom line of what you're getting paid per hour. And I think when we were younger, yeah, it's one, but it seems like the older we get, we start looking at the total package, the total compensation, not just the rate per hour or your annual salary, but also what benefits come along with that. And that's especially the voluntary benefits. Is there medical and dental and vision and all that? And, how much is coming from the employee and how much does the employer pay? Is there services like tuition reimbursement or any type of money set aside for professional organizations that you can join, things along those lines. I know when I was working in the kitchens, and that was something that I always tried to look at was not only my hourly or my salary, but, hey, will you, as part of my compensation package, pay for my yearly membership for the Chefs Association? Will you pay to send me to conference every year? Is there an allowance for uniforms and that type of thing? So things like that can be considered part of the compensation package as well. So not just, just the mandatory stuff, but then also the voluntary stuff that can kind of sweeten the deal, so to speak. So federal and state laws mandate what are our basic requirements for compensation. So in the Fair Labor Standards Act, a minimum wage is set, and it also is set as far as the standard for overtime. So anything over 40 hours, you are paid time and a half hourly rate, with some exceptions as far as the exempted employees for salary and such. Now, if your employees are tipped employees, so they're servers, whatever, and they get tipped, they can be below minimum wage if their tips plus wages is at least the equivalent of what that minimum wage salary is. And then, of course, the Equal Pay Act states that, the same pay for equal work. So it is a big one that we need to be conscientious about as well, that we are paying our employees the same pay for the work that they're doing. Now, as of last year, the federal minimum wage was $7.25 and the tipped wage was $2.13. And last year, Illinois minimum wage was 10 with employee tip wages 6. I know 2021 in January this year, it went up to 11 as far as the minimum wage, and the tipped wage is 60% of whatever the minimum wage is. So last year it was $10 an hour. So 60% of that is 6. So now it's $11 is the minimum wage. So you got 60% of that, which would give you how much you can pay for your tipped employees. But remember, when between what they claim for tips and what they make in that tipped employee's wage, divided by the number of hours, needs to at least equal or be greater than whatever that minimum wage is. If not, you have to make up that difference. Yeah, there is, when it comes to pay, there's no one size fits all when it comes to pay rates. Location, for example, makes a huge difference. Peoria versus Chicago. I was just having this conversation just yesterday, I believe. You can go up to Chicago and you can find jobs in warehouses starting at, $20 an hour, $25 an hour. If you're getting a warehouse job in Peoria for 20, $25 an hour, I think a lot of people will be happy with that. That's a pretty decent wage in Peoria. In Chicago, though, because cost of living is higher, that $20, $25 an hour is kind of like making minimum wage, kind of like making that, $10 an hour back in Central Illinois. So, it's not necessarily all coming out to be equal, because you hear people that make these larger salaries and stuff depending on the city that they're at. But the thing is you have a higher cost of living in these other areas. And so you need to make sure you take that in consideration when it comes to what you're doing for your compensation for your employees. And so Exhibit 9.4 has different factors that affect your pay rate. So what are the revenue levels of your establishment? What are the standards set? Local and regional regulations and the pay studies. What is your competition doing? So you can make sure you're being competitive. Of course, state and federal minimum wage laws. Types of service and skills required. Is there a collective bargaining agreement through a union? Other factors that can be in there, plus any controllable costs. So there's a lot of different factors that go into the decision on how much you are going to pay somebody. Again, as employees, I think we forget, or we're not aware of the other factors when it comes to pay rate that employers have to deal with that we don't ever see, because it's all done on the back end of everything. So when we're doing compensation, it's something we need to be looking at regularly, at least annually, to make sure we are being competitive and making sure that we are getting our most bang for our buck and making sure our employees are being treated fairly. So Exhibit 9.6 is a typical control process, the steps as far as with compensation. So, of course, number one is analyzing the factors that affect our compensation. Then you establish standards for the organization based on that analysis, train the staff to follow those procedures, monitor their performance and compare it with these standards. If there's any deviations from the standards, you would take any action, and then monitor factors to keep up to date on those compensation issues. Just that circular process that happens when it comes to a lot of these things. If you noticed in the previous chapters that we've discussed, a lot of things have that circular motion. You just kind of work your way back and then keep the process going. Some different compensation policies that you will probably have to deal with if you're at that level. Nowadays, direct deposit is kind of more of the standard. Instead of having a paper check every 2 weeks or what have you, you do direct deposit. But you need to make sure that there is an established policy on how direct deposit is done, and that you get the appropriate information so that that money can be deposited appropriately. Garnishments, if there are any legal garnishments that need to be done, whether it's through a judgment of the court, whether it's for child support, maintenance, things along those lines, you have to comply with those documents and making sure that the money is being garnished from the employee's wage and sent to the appropriate locations when need be. On-call pay and payment when called in, you might have instances where you have people that are considered on call, where they're not necessarily coming in, but they can be called in if they need to be. What the pay for that is, making sure they're compensated appropriately, and then of course when they're called in, what that pay is. Need to have policies on pay increases. What is the policy? How often do you do evaluations for merit increases and pay increases? what is kind of the standard, what are the ranges that can work for them. And again, having documentation that the supervisors can fill out to make sure that you are applying the standard fairly across the board. Also, you need to have policies on promotions and reclassifications. What is the policy when somebody gets promoted, let's say from a line cook to a sous chef? What are the policies on reclassification within your division that you are working in? Do you have a policy on merit pay that, if you are meeting this certain level, that you get either a set amount or a percentage of your salary or of your pay that's automatically added as considered in a merit pay? Confidentiality of compensation information. This is an interesting subject. Employers a lot of times frown upon people talking about what your compensation is. However, an employer cannot prohibit you from talking about your compensation for with other employees. And in fact, that actually goes against the Fair Labor Standards Act. And there's been rulings with the National Labor Relations Board with it and the whole 9 yards. And the biggest reason is to hopefully dispel and remove pay gaps, whether it's between gender, age, whatever that may be. So it's not something that you are not allowed to talk about. In fact, it's illegal for an employee to require you to not discuss your pay rates and stuff like that with other employees. I mean, you don't have to, but they can't tell you you cannot do it. You need to have policies as far as salary adjustments. So, so I'm going to get a pay raise. You need to make sure there's a policy on when the effective date happens, and making sure it's in writing that when somebody does get a pay rate increase, when does that become effective? Same thing with salary deductions. What are your policies? You need to make sure that you have documentation as far as permission, because even though it's something that can be automatic, there's some things, but like if you're doing insurance, there needs to be documentation that needs to be signed by the employee that's saying, yes, I am granting you permission to deduct this from my salary. So they can't come back and say, hey, you're taking money from me that I didn't agree to. Well, you have that documentation, that policy there that you can say, well, no, you agreed to this. A salary structure is a good thing. And you see these a lot with the larger companies and with the chain restaurants, things like that, because they have those built in. But independents usually have a tougher time. They usually don't have a HR department. And so people that are working on the structure for salary and what the ranges and stuff are is a little more informal than what you'd find in the larger establishments. Do you have policies for shift and weekend pay adjustments? You don't see that as much in our industry, but I know in other industries, like if you work third shift, you get a pay adjustment. So you actually get more per hour to work third shift than you do first shift. Same thing if you work weekends, you get an adjustment, more money to work on the weekends than you do just the weekday. Again, not as much that we see that in our industry, but it is something that can happen in our industry from time to time, and you do see it with other industries as well. And then, of course, you need to have policies on your procedures as far as how you keep track of the time and the record keeping for the time clocks, whether it's done by a point of sale system or other computer system, or it's done manually. You need to make sure that there's policies in place. Again, all that documentation that keep beating the dead horse, I think, to y'all when it comes to as far as a document, making sure you have those policies and stuff in place. But again, it's extremely important because that makes sure you have all of your I's dotted and your T's crossed in case there happens to be issues down the road. So looking at pay increases, do you look at, there's different ways you can look at it through merit pay, which is typically incentives for employees to improve your performance and increase your productivity. It's a motivation. It's not an automatic, oh, you're automatically gonna get a pay. Yes, you get a pay raise if you meet these requirements, these minimum requirements. You get a merit pay increase. Again, make sure you have policies to make sure it's administered fairly to all employees, and you need to make sure you have objective measures of performance. Something that, kind of like those SMART goals, you need to have very objective measures, not subjective. So it's yes, no, it's 1 to 5. It's an easy way for it to be evaluated, and that you can do it fairly across the board. When you talk merit pay, usually you look at job performance, and that is the employee's performance compared to the standard. Sometimes you'll take into consideration their accomplishments as far as going above and beyond. Of course, current pay rate is where an employee is at that rate range for the job right now. And then the other thing you have to take into consideration for pay increases that are outside the employee itself is the business goals. Where is the business at for labor costs? Are they under budget? Are they over budget? How much merit increases can be given and still make sure you're hitting your target markets for your labor costs as well. So the exhibit here, as far as merit increases, includes what your current rate is, your job performance, the accomplishments you've done, and the business goals. All are factors that play a role into how much and what type of merit increases are you able to offer to your employees. Of course, exceptions may need to be made for employees at the top of their pay range, because it is something that you might have it set in documentation that this is the pay range for this, let's say, cook. Well, if they get to the top of their pay range, what are you going to do? Say, I'm sorry, we can't pay you anymore. That's not going to be a good motivator for them to want to, do better, and even maybe to stick around. They might be looking somewhere else. So you do need to take in consideration those employees at the top of their pay range that are exceeding those expectations. Now, from your end, remember, employee payroll information should be kept confidential. So you should not be going and blabbing and saying, oh, yes, so-and-so is making this and so-and-so is making that. Again, it does not prohibit the employee from talking about what they make, but you need to keep that information confidential, that you're not telling others, and saying, oh, this is what this person's making, et cetera, et cetera. So what we have here in Exhibit 9.9 is again, a template and is a sample of a performance score sheet. And so you can see this person, Sally, is a server, and they did a job performance evaluation from January of 2012 to December 31st of 2012, so for the year. And what they do is they base it upon what is the different job factors, the performance. So how are they doing in number of customers served, the check average, customer service skills. So they're basing these off of the job description and the SOPs that are created for that job. And then the next column, they see what's the maximum rating they can be given. And then the next one is what the manager rates them at. So you can see in this case, the manager rates Sally a 10 out of 10 for both number of customers served and the customer check average. Looks like she needs to work on her customer service skills. It's 15 out of the 25. She's got 15 out of 15, so she's doing good with attendance. Her attitude is fairly decent, 15 out of 20, and her participation is 15 out of 20. Now, that's just those job performance. Then, as far as any accomplishments, you can see it takes note there that Sally designed a new series of table tents. So it's something that's going above and beyond what is minimum requirements. So in that case, she got a 15 out of 20 for that. And then the contribution to business goals, 15 out of 20. So the maximum rating is 140. The manager rating based upon that criteria is 110. And then so you can see then based upon the numbers, what the merit increase is. So if that rating would have been 140 to 126, it would have been the maximum amount of whatever the merit increase is. 125 to 106 is 2/3 of the amount, which is where she falls in this example. 1/3 of the amount from 105 to 91, and then no pay increase for 90 to 0. So again, this is just one example of a way that you can look at merit increases through a performance score sheet. But again, however you're designing them, make sure you're looking at objective ways you can evaluate the employee. And of course, make sure you are evaluating each employee fairly. Make sure that you are not discriminating or giving undue added bonus to somebody else, that you're applying it fairly to everybody. So in chapter 4, we discussed performance appraisals in the way to get the most bang for our buck from our employees. So we talked about, what are they doing well? What things can they improve upon? What goals can they set for the next appraisal? Most of the time, those performance appraisals, you can directly tie to your pay increases too. So again, by combining those two, you're not only getting better drive and you're getting more performance out of an employee, but then they have even a better reason to make sure that they are performing those tasks and getting the things done, because it's attached to a pay increase. Make sure you have, and if they do, you use company policy to determine how often and when to do your performance appraisals. Make sure you can justify performance ratings given, especially if they are tied to pay increases. So it can't be just a random number or just a random assigned setup. You need to be able to justify through documentation, a lot of cases, why that rating was given, especially because those ratings are going to tie to how much money they're going to be making. So you need to make sure you have your I's dotted and T's crossed. So if they question as to why they were given this rating, you have the documentation, the justification as to why they were given that rating. And again, just like in chapter 4, be conscious of how you present the information. Remember, it's not what they're doing wrong, but identify problems and work to develop corrective action plans. You get more bees with honey than you do vinegar. Coming up to the end here. So payroll services and record keeping. If your head's spinning right now, don't be alarmed, because you're not the only one. We are cooks. We are the creative mind, and we think of food and we think of flavor profiles and all these amazing things. And now we're talking human resources and payroll compensation and Social Security wages and all this, and we're going, oh my gosh, this is not what I signed up for as far as being a chef. You're not alone. Even again, if you are not, even if you're like, I don't want anything to do with this, I'm going to hire it out, and that's perfectly fine. They have that. You need to at least be aware of the basics. And that's what this class is about. It's about the basics and, going from there. And, when it comes to payroll, there's a bunch of payroll tasks. You have to look at gross pay, the taxes and charges are withheld from the paychecks, any mandated benefits to be paid, the employee voluntary benefits that you withhold, making sure you're completing the forms that are sent to the government agencies with their payments. You can do that all in-house, or you can outsource it. Of course, records, need to be kept for payroll and human resources information. Unless you're a large business, a lot of small businesses go with outsourcing a lot of the payroll tasks and stuff, because they find that's cheaper to outsource it than it is to do it in-house. As a potential owner, you're going to have to make that call, whether you're going to do that stuff in-house or are you outsourcing that part of your business. And there's no right or wrong answer. It just depends on what works best for your business. But no matter what, whether you outsource it or not, you need to be have some knowledge of this process, so you are feeling more comfortable when you are looking at payroll for your employees and what the expenses to you as the employer are going to be when it comes to hiring a new person and bringing people in and pay raises and everything that goes along with that. So compensation packages, it's extremely important, because that's how you're going to get and retain quality employees. But it's for most people a lot more than they realize. behind the scenes that comes along with it. Hopefully, this gives you a little bit more of an insight so it's not as overwhelming. But I'm guessing for a lot of you, it's kind of really the first time that it's ever really been discussed or even on your radar. So it's kind of one of those eye opening things that comes to, whoa, if I am owning a business, these are the additional things that I have to take in consideration, not just the what am I going to serve on the menu and what bar specials are we offering tonight, but all these other things play an important role into you having a successful business.